Give me a thumbs up for this little guy right here. Look how tiny he is. Say hi. No yawn today? No? What's going on, guys? It's Investing Hustler here, and today I have lots of news for you guys. And one of the main companies we're going to talk about today is Aurora Cannabis. So Aurora Cannabis has been on fire today. Aurora currently, right now, it is 12:34 p.m. and Aurora Cannabis is up 8.23%. So if you watched my morning live stream, Aurora Cannabis this morning was up 4% during the live stream. They dipped down to 3%, and now they've just been on a nice little run. So the question is, how high will Aurora Cannabis go, and why is Aurora Cannabis on fire today? So there's a couple articles as to why Aurora is on fire today, and we're going to get to that real soon. But for now, I just want to mention one thing. I just want to take a look at Namaste right now because Namaste stock is kind of getting beaten up. And I just want to show you guys right now, Namaste is currently sitting at 91 cents. And from what we remember, about a month ago, Namaste hit a support at 91 cents, and it seems to be hitting that support line right now. So I'm not saying that it's going to bounce off the support line and do a nice run again, but this does seem to be a nice little support line for Namaste. We're going to see if it breaks the support. By looking at these charts, we can see that Namaste is currently hit that 90-cent support line a few times and bounced up, and even once it went as low as 89 cents in the morning. So we're going to see what's going to happen with Namaste. Right now, they seem to be hovering around 91 cents. So that's just something I want to be keeping an eye on. So let's move on to the first article, which is illegal cannabis is still dominating supply in Canada. So Statistics Canada on supply. In its recently reported data for cannabis supply and demand in the fourth quarter of 2018, Statistics Canada reported that illegal cannabis accounted for about 65% of the total supply in the fourth quarter of 2018 alone. However, this was a gradual decline from 79% in the third quarter and 82% in the second quarter and about 87% in the first quarter. So sequentially, the proportion of cannabis produced in the illegal market was also down to 59% of the total cannabis produced in the fourth quarter from 73% in the third quarter of 2018. So demand. Statistics Canada also reported a shift from illegal cannabis to legal cannabis source when it came to the demand side of things. In the fourth quarter, demand for illegal cannabis declined to 66% of the total from 79% of the total in the third quarter. So yeah, I personally think that obviously the government has to regulate and have rules and laws for this legal cannabis. The government's making it a lot harder for these companies to expand and do exactly what they need to do in order for them to grow, especially in Ontario. Right now, we don't have no dispensaries in Ontario. Not a lot of people like purchasing anything online. People like to go into stores and purchase whatever it is they need to purchase. So the fact that the only way to get your legal marijuana in Ontario is through their website, it makes it a lot harder for these companies to grow in Ontario because a lot of people don't even like to do online shopping. They don't trust it. People just like the brick and mortar. And that's one small reason as to why these companies are not growing as fast as they could. Sometimes maybe the government just needs to step out of the way and let these companies grow and do what they have to do, obviously following the rules and regulations. But yeah, that's it for this article. Let's move on since we have a lot to talk about. So, has the legalization of marijuana been a success in Canada? So, Statistics Canada reports on cannabis. Last week, Statistics Canada reported its latest statistic on cannabis in the fourth quarter following legalization October 17th. So the price per gram, legal is about a little bit less than $10 and illegal went down to a little bit more than $6. So Statistics Canada reported that cannabis related expenses accounted for about 0.4% of the country's GDP in the fourth quarter. One of the key reasons to legalize cannabis was to eliminate the illegal market. However, the illegal cannabis accounted for 65% of sales, while the remaining 35% was contributed by the legalized cannabis segment. But keep in mind that this was just the first quarter of legalized cannabis. Illegal cannabis is cheaper. So Statistics Canada also shed light on the pricing for illegal cannabis in its recent report. The price for legalized marijuana stood at $9.70 Canadian dollars per gram in the fourth quarter, which was much higher than the illegal markets, which is $6.51 of Canadian dollars per gram. Lower prices in the legal cannabis market compared to the legalized market may slow down the shift of customers buying from the legalized market. Lower prices may also keep the illegal market alive and threaten players in the legalized market. So, of course, the illegal market's not just going to disappear like that with a snap of a finger. And of course, they're competing with the legal market. So the illegal markets, without surprise, dropped their prices to about $6.50 per gram, and the legal market is almost at $10 per gram. So this is a battle between good and evil, and it's pretty interesting. I actually look forward to seeing these statistics, whether the eventually one day the legal market will take over. I think once the government allows these companies to do what they have to do without all these obstacles, then it might become easier for companies to expand and one day to take over this market. But for now, it seems like the illegal market is in control of 65% of the sales. But yeah, let's move on to the next article, which is MedMen comments on the recent market activity. So if you guys have noticed, MedMen has been on a nice little decline. We're going to talk about a few articles on MedMen. So right now, MedMen is down 2.58%, currently sitting at $2.89. I'm actually very tempted to start a position on MedMen, considering they're kind of cheap right now. And looking at their valuations, they seem fairly valued, especially compared to other marijuana companies. This might be one of these cases where a stock gets beat up because of the news and then might push forward. One example would be Afria. I was buying Afria as it was getting beaten up, and then look at Afria now. On February 26th, the OTC markets made inquiries regarding certain promotional activity concerning MedMen securities. The promotional activity relates to promotional materials, encouraging investors to purchase the company's Class B subordinate voting shares. After due inquiry, the company identified the promotional materials as an article featuring the company that was posted on February 25th on the website marijuanastocks.com by Winning Media LLC. Company's engagement of WM involved the creation by WM of digital content featuring the company and the purchase of advertisement on Google and Yahoo Finance intended to drive awareness of the company. So after due inquiry, the company is unable to determine whether the promotion resulted in increased trading activity in the company's stock. While trading in the company's stock increased between February 26th and February 28th, the company believes that the company's announcement that it would release quarterly earnings on February 27th was a factor leading to its increase in trading. So it seems to me that MedMen made certain promotional activities that was not allowed, which was encouraging investors to purchase the company's Class B subordinate. And because of that, there's obviously some rules and regulations that these companies have to follow, and apparently MedMen broke it. I'm not 100% sure exactly what happened, but that's another reason why MedMen has been beat up lately. But I'm pretty sure the story is going to unfold. We're going to see exactly what happened. But for now, I'm very tempted to start a position with MedMen. We're going to go to another article, which was Has MedMen stock bottomed out? So after posting strong returns of 19.5% in January 2019, MedMen Enterprises stock fell 13.7% in February. And as of March 4th, the company was trading at $3.94 Canadian, which is about 215.2% higher than its 52-week low of $1.25 Canadian. Last month, the New York Medical Cannabis Industry Association, which is working to legalize recreational cannabis sales in Albany, had asked MedMen to resign from the association due to allegations of financial irregularities and racist and sexist remarks. The NYMCIAS announcement about ending its association with MedMen caused its stock to fall. Also, the company posted its fiscal 2019 second quarter on February 27th. The company posted year-over-year revenue growth of 871.8%. for the quarter, while its gross margins improved from 45.2% in the first quarter of fiscal 2019 to 53.2%. However, MedMen's second quarter results failed to impress investors as its stock price continued to fall. So I'm going to be looking at MedMen real quick. And right now, as you can see, they've been on the downfall in the past week. They went all the way down from $4.40, 44 cents, to now being $3.85. They are in the bottom half of their 52-week range, and currently, according to technical analysis, they are a sell and a strong sell, having 494 million in assets and a market cap of 510 million. Also have 441 million shares outstanding. If you look at their price to sales, it's a 9.6. Price to book, it's an 11.9. Comparing that to a lot of its peers, I would say MedMen is undervalued. But anyways, that's enough about MedMen. Let's move on to the next article, which is Chronos Group got a market perform rating from Cowen. So I'm going to go straight to the analyst recommendation. So as of March 5th, analyst consensus recommendation for Chronos Group was a hold, Among the 8 analysts covering the stock, 4 recommended a buy, 3 recommended a hold, and 1 recommended a sell. The consensus target price on Chronos Group was $20.80 Canadian, which was much lower than Cowen's price of 29 Canadian dollars. Chronos Group closed well above the consensus target at $28.60. So here's why Aurora Cannabis is now Cowen's top cannabis stock. So Aurora Cannabis is already Canada's adult use marijuana market share leader, and now it's Cowen's analyst Vivian Azer's top pick in the space, after having coverage initiated at the research house. So Aurora Cannabis was initiated with an Outperform rating of $14 Canadian, and the stock closed Monday session on the Toronto Stock Exchange at $9.60. The stock is up 2% in trading on the New York Stock Exchange Tuesday. Well, today, if we look at Aurora Cannabis, they are currently up 8.85%. So Aurora has had a very nice run, and it's probably thanks to this news. The firm noted that with a full 20% market share in Canada and presence in 23 international markets, which is now 24, Aurora has a distinct advantage in growing its global footprint. So additionally, Azer raised the company's international medical marijuana market size forecast to 35 to 31 billion by 2024, up from 9 billion previously. Aurora replaces Canopy Growth as the firm's top pick, though Azer noted that while Aurora will probably need to raise capital in the coming quarters, Canopy Growth has a $5 billion cash pile to fund its expansion. Hint, hint, Aurora needs to make a deal. Well, they don't need to make it, but I think that would really help Aurora Cannabis out. So Aurora Cannabis got an Outperform rating from Cowen. So we keep hearing about this company, and we're actually going to take a look at Cowen real quick if we have time. So let's go straight to the analyst recommendations. So as of March 5th, analyst consensus recommendation for Aurora Cannabis was a buy. Among the 9 analysts covering the stock, 3 recommended a strong buy, 4 recommended a buy, and 2 recommended a hold. None of the analysts recommended a sell on the stock. The consensus target price on Aurora was $13.50 Canadian dollars, which was slightly lower than Cowen's target price. However, the consensus in March was at a much higher level compared to the consensus at $11.80 in February. Aurora Cannabis closed at $9.60 Canadian dollars on March 4th, which would mean an upside of 14% on the stock. That's a pretty nice raise in their target price, all the way up to $13.50. So the real question is, can Aurora go up above $13.50? I think that is very possible, especially if you look at their 1-year charts. Aurora has been one of the most volatile companies, and it's not even close to its 52-week highs. Right now, it's right in the middle. And I feel like right now Aurora has a lot of momentum pushing them forward, especially this news. It seems like it's going to push them forward. I will not be surprised to see Aurora go above $11 by the end of this week or by the end of this month. So yes, I do think Aurora will be going above $11. They do have a nice resistance at 10.94. That was the highest they've hit in 2019. And I think this news alone, and hopefully more good news, will push Aurora above that $11 mark. So far, it's looking very good for Aurora, up 8.65%. Let's just hope I didn't jinx it. And now for the final article on Aurora Cannabis. Marijuana stocks. Aurora Cannabis will be the first profitable pot company, Cowen says. So the first profitable pot company. Cowen calls on Aurora and Cronos come as weed shortages strain Canada's recreational market. Analysts and executives say those pot shortages could last through at least this year. Executives have also said that Canada's province miscalculated demand and perhaps listened a bit too much to the media reports warning of marijuana oversupply. As for its prospects for profitability, Azer said that Aurora Cannabis is on pace to reach positive EBITDA by June. That would make Aurora among the first licensed pot producers to do so, ahead of Canopy Growth, Afria, and others. Azer said Aurora's containment of expenses not related to pot production, as well as higher gross margins, would help it generate positive EBITDA. Higher gross margins will also help, she said. So yeah, it seems to be like very good news all around for Aurora Cannabis. I have a feeling that all you Aurora Cannabis shareholders are very happy today. Anyways, that's it for now. If you enjoyed this video, don't forget to give me a thumbs up. And let me know what you guys think about this news from Aurora Cannabis. Will they be breaking that $11 mark by the end of this week or this month? And what do you guys think about that new price target for Aurora? If you're not subscribed yet, don't forget to hit that notification bell and smash that subscribe button. I'll see you guys next time. Bye-bye.